Please, if you cannot hear me, please let me know. I can be, you can text in the chat box, or you can actually, unmute the mic and ask any question. If you want to ask a question, you can ask any question immediately. All right. So we actually both, I think, we understand what exactly the broker is. And if I may ask in the group, to those who just tune in right now, what is the broker? And again, what type of brokers can you find outside there? About forex trading.
Recording in progress.
So is there someone who understands what a broker is, and what types of a broker can be able to find? Before we go a little bit more further. Anyone? I mean, we're all traders. We trade with a broker, so we should know what a broker is. Yeah, I see a hand there from Mr. Mike. You can type.
Okay, let me try.
Yeah.
Okay, let me try. The broker is the company who run the market.
The company who run the market.
Yes, who run the market.
Okay, all right. Is there anyone else who has a different, interpretation?
Yes, can I try, guys? A broker is an institution that links us to the market. So it's like an intermediary to the market.
Intermediary to the market. Okay, all right. Norman, you are really pretty close. When you say intermediary to a market, is very close. I'm not gonna lie. All right. So in a simple term, a broker, it's actually a middleman from the liquidity provider to the retail traders, which is between you and me, right? We are a retail traders, right? So that's what the brokers are. And in order you to actually access the global market, you need to go through the retail broker, right? You need to go through the retail broker so that you can be able to access the whole global market and be able to trade different types of instruments, different types of pairs, indices, and everything, bitcoins, and also the Apple, and also the stocks in a forex market. So there is a different types of brokers that you can find in the market. Because we are starting to trade, we don't really want to pay more attention about the broker side, but it is important to understand also the type of a broker that you are trading with, so that you can have much more confidence enough that your money is safe, and you can be able to trade without any type of a challenge at the moment. So there's the difference between, there's a broker called STP Broker, and then there's a broker called the ECN Broker, right? Now if you have question, please stop me and ask. Okay, so the STP Broker, what exactly it stands, it actually means it's a straight through from the process, right? Straight through processing. So in fact, it's a forex brokerage, a model that involves sending client orders directly to the market without passing through the dealing desk. So there's a different brokers that they call themselves brokers, while they are actually what you call the sub brokers, that they actually standing on behalf of another broker. So let's say I am a broker, right? I open a company brokerage, and another guy came to me, said, you know what, I stay in Namibia, for example, or I stay in Botswana, and I want to open a brokerage, but I don't have all these requirements to be able to open a brokerage? Can I be able to use your license and actually be able to, open the broker and people start trading? So those are the brokers that they're offloading the trade from you, a trader, to the guys that they are having the called the white label, and then offload it all the way to the market. You see, so now there's a 3 more steps that actually your trade is stopping to be offloaded into the market. Now, if it is in that case, those type of brokers become expensive. Is because each and every person, a middleman, we want to take some, a certain percentage from your trade, or they want to do a little bit of makeup so that them also they can make money. But we should understand one thing: doesn't mean that broker manipulates their accounts, but it means that you will be able to charge a little bit more because of there's a couple of steps for your trade to be able to get directly to the market. So the STP broker, it's similar, to an ECN broker, where all clients' positions are passed directly to the market through interbank exchange houses or a liquidity providers. So we are talking about the STP broker and the booking broker, right? A booking broker. So a booking broker, it's a different broker whereby a broker itself will have maybe a different book from book A to book B, and decided whether to take a risk in the house as a company or to offload the risk to all the way to the liquidity provider, right? Then there's the brokers that I was explaining earlier on about the dealing desk brokers. The dealing desk brokers is the broker whereby they are under a certain broker on top of them. So in that case, they're like a white label. In that case, when you execute an order, goes to them, now they have a markup, and then it goes to the liquidity provider, which is the market directly, right? So the STP Forex broker promised to offer a highly transparent trading environment that is devoid of any conflict of interests with its clients. That's basically what Globix 360 is. We are the booking STP broker. Some other people, they can call us the ECN brokers, whereby when you execute a trade, you take the trade directly to the liquidity provider, to the market. There's no one in the middle that actually also gonna put a little bit of a markup in terms of your trading. Okay, is there any questions so far? Oh, so far so good. So how are STP Forex broker different from the market makers, right? Okay, there's a little bit of a question from there. All right, all good. All right, good. All right. So here we want to find out the difference between the STP broker that are different to the market makers broker. So the market maker broker are dealing desk companies that absorb the client orders and they pass them, to internally to other clients, or other clients, or take the opposite and end to the trade. The market makers or dealing desk brokers do not connect the traders to the global liquidity pool or the interbank exchange. Therefore, all orders are distributed between the clients, and the brokers has the option to either fill orders from their clients or reject them completely and according to the market liquidity. So the differ with the STP broker, which is I've already explained, which is the STP or a SCN broker, have several similar characteristics, but some traders prefer the STP broker in its pure from due to the lack of a commission or per trade that is usually associated with the ECN accounts. So the market makers, as I said, that your trade, it doesn't push directly to the liquidity provider at the same time. So it stopped at a dealing desk, which is that specific broker, and then they can fill your order manually, or they can have a certain machine that fills your order into the liquidity provider, right? So most of I think a lot of you guys, you've been heard about what you call boom and crash, instrument. Those are the instruments that are created by the broker, specific broker. It actually means when you open that trade, it goes on their dealing desk, and then they can take that trade and feed into directly into the market for you. So it doesn't mean they are manipulating the trade, but they can, because they do have all the power to take the trade and feed it into the market. But it actually means you're going to have a little bit of more charges than when you are trading with a broker like us, like Globex 360, where we're taking you directly to the liquidity provider without any dealing desk. Another disadvantage that you can see from the market makers is that the whole global market is actually created. Is there any question? Okay, all right, cool. So the whole global market is actually, based on economic events that are actually the global economy, if I may say so. So it happens that you find out that on a specific day, there's an economic event that can drive the market to both, sideways, whether, up or down, depending where the market actually is, right? And then you can find out that there's a political events that are actually happening at that specific time. And if you don't know about that, or if you are trading to the market maker broker, their platform is not going to move based on the economic event. It's not going to move based on the political events or based on the pandemic events. We have seen COVID-19, and beginning of COVID-19, a lot of stocks were falling, a lot of stocks were going down, because of those are the things that drives the global economy. And what we are participating in a directly global economy. So what I'm trying to say here is that we need to, be aware of market maker brokers, to understand that when we are trading with the market maker brokers, we are not trading directly to the market. Any questions so far? So far, so good. All right. No problem. Looks like everything is clear. Okay. All right. So what we basically actually wanted also to cover a little bit, it's about, the stop losses and take profit and orders. In fact, the reason why we're saying the orders is because of last week there was a few clients that they asked about where we can place the order and how can we place the order, and understanding the orders itself because most of the time you don't really understand what exactly the order is. In fact, when you are actually trading, there's a different orders that you find in the market, in a forex market. So you can find the buy orders, the sell orders, the stop orders, or the take profit orders. Those are different when you are in the market, and you need to understand when to put that, where to put that, so that it can be able and trigger and you have the trade. So by with the time we're going with the presentation, we're going to go all the way to the also understand the slippage of the trade. How does it happen? It doesn't hit your whether you take profit or your stop loss, or whether you're pending order because of the slippage. So those are the things also we needed to discuss today. Any questions? And as I said, you can stop me immediately and you can ask any question or type on a chat box. So of course, most of people, we understand what a stop loss is. The stop loss order, it's when we buy on a long trade, and stop loss can be placed below the entry price at which the currency pairs or other assets can be bought, right? In this case, the stop loss order will automatically close the liquidity that they trade by selling if the market price reaches the level at which the stop loss is placed, right? So here's the example. If for example, you enter the price at here where it's been indicated, you put a stop loss, you put a take profit above, it means when the trade, it goes all the way to where it says stop loss and hit the specific line that you say the stop loss, immediately it will close the trade. So it means whatever you put as a loss, whatever you put the distance, the difference between open price and the closing price, that will be your loss at that specific time, right? So this is another type of a strategy that a lot of traders, they use when they are trading. But there's a trick about it. A lot of people, they lose money with the stop losses, because remember one thing, when a trade goes all the way and hit your stop loss and it closes, it still closes you on a loss. You're still losing on that specific trade, right? It doesn't mean it closes you on a stop loss, then you didn't lose something. There's something that lost on that specific market, right? So here's what you need to do when you are trading and trying to put the stop loss. You enter the trade, put your stop loss, right? When you see the trade, it goes going on the direction of a stop loss, you move the stop loss a little bit below, right? So you are pushing against the price where it is. As long as you're sure with the trade that the trade is going to go on your direction, you move the stop loss a little bit backwards. Now when the trade getting into profit, you move the stop loss again up. So each and every, maybe if you are trading, for example, with a 15 minutes candlestick, you can say each and every 2 candlesticks that fall, you move the stop loss to the new candlestick that is being formed. In that case, you are locking your profit. It means it's already, the trade already get into profit, and now you lock the profit so that even if it come back, there's a certain percentage that it's gonna close in the profit. Here's the mistake what a lot of people do. They will open a trade and leave the stop loss, put a stop loss and leave it like that. The trade, it goes into profit, they start making money, and now something happened, the market is reversing. When it reverses all the way back and hit the stop loss, and now starting going back again to the direction that they predict that it will go. But now, if they were locking the profits with the stop, moving at the stop loss, they couldn't have any loss. They could have locked a specific amount of profits and then close the trade in profit, increase the margin, increase the equity, and now jump into a different trade. Are we together on a moving on a stop loss and a take profit? Any questions on the stop loss and take profit? All right, ladies and gentlemen, there's 8 more minutes left. It's gonna cut, and please rejoin again as always, as usual. Today the presentation is not that big. It'll be way quicker and faster. All right. So just a pretty more explanation with a buy long trade, vice versa, like than the picture that we see. Your stop loss is placed below the entry price with a take profit above the entry price. If the price decline and hits your stop loss, you will make a loss. If the price escaped to hit your take profit, you will make a profit. So same strategy of moving the stop loss and your take profit. I think this one you need to actually practice it so that you can be able, to start getting in the use of how you can move your stop loss and your take profit above, so that you can continue locking your profits when you are making the profit. So a stop loss can be attached to a sell or a short trade, in which case it is also placed above the entry price and automated closed liquidity. the trade the trade with a buy action if the price level of the stop loss it's actually reached at that particular time. And now there's take profit, which is the same thing. Take profit and stop loss depending on the direction of your trade that you choose that is gonna go at that particular moment. So a take profit order closes the trade automatically when the price of the traded assets reaches the price level at which the take profit order is placed. Just like a stop loss order and a take profit order is subjected to potential a positive or a negative slippage. In a certain instance, it may be preferred not to use a take profit order. In this case, a trade would mostly likely use a trailing stop loss to lock in his profit. Alternative, the trader can also close the trade manually at optimal price when it hits at that specific price. So far, any questions about take profit and stop loss? Okay, so we already know how to place the stop loss and take profit. If you're trading with a computer, it's very easy. You can, when you set a new order, it will show you this. You can see, so here, this is where you put your number, where the trade, where you say that it's gonna stop, you put that price here. Here where you put the number where you say the trade is gonna actually take the profit, and then you execute the trade. All right, so this is the MT4. If you are using computer, when you click open a trade, open a new order, this is where it's gonna show you, right? You see where it says market execution. When you click market execution, it's gonna show you whether it's a market execution or you want a pending order, or you want a buy limit and a stop buy limit or sell limit. This is where it's gonna indicate you. So it's very easy from the MT4 to actually execute a order. You only change where it says type, market execution. If you want to open the trade, it's on a market execution. If you want to put the order, you click and you select pending order, buy limit or sell limit, depending what type of order do you want to execute at that particular time. So as a pending order that you are asking, a pending order, it's a request made by the trader to a broker to say at which price level a position should be open or closed. Experienced traders don't advise a trading on the Forex market without using a pending orders, since they help to avoid a significant losses. The concept of pending orders can seem somewhat complicated to a new traders. The way they are used or where they are used at all instant, that obviously compared to the standard trading orders. So let me just quickly talk about the buy limit, sell limit, then we can go on a chart and actually do it manually and see how we do it. Okay, so now buy limit. So when you're doing the order, there's a buy limit order. It is used if you want to buy a currency pairs, open a long position at a level which is below a current price. So the price is here, the below price is somewhere around here. Now you want to buy a buy limit. That's where you enter you see that, okay, this trade is going to come all the way this side, right? But I don't want to enter it here. I want to enter it from there and buy it. That's where you actually put a buy limit. So you put your buy limit, you click a buy limit, and then you put the number that is below here, the number that is on this side. You enter it. That means when the trade goes all the way down, hit that number, and then it will triggers your buy limit. start, buying. Right. So for example, if Euro USD is currently trading at 1.2378, and you believe that it can reach as lower as 1.2300, and then it will rise if you want to have an automatically triggered a buy order. So at 1.2300, you should use as a buy limit pending order. Basically, buy limit order lets you enter a trade at a better rate than a current available price that you're seeing in the market. So there is also a sell limit order, vice versa of the buy limit order. Should be used when you want to sell a currency pair. Open a short position at a level which above the current price. For example, the GBP USD is currently trading at 1.4531, and you believe that if the currency pair reaches at 1.4700, it will surely go down after that. So definitely, if you want your broker to enter a short position at 1.4700, you should use a sell limit pending order, like a buying limit order. So the same as the buy limit, you can use it as a sell limit. If you think the trade will go from here to there, and then you want to sell it from that side, goes all the way down. Yeah, ladies and gentlemen, anytime it will cut, and please rejoin again so that we can finish with a slippage and understanding the slippage that we see in the market. Okay, so for now